One of the key architects of absolutely the game-changing reform for indirect taxes, the goods and the services tax, Mr. Hasmukh Adhia, India's Revenue Secretary, joins us right here on ET Now. Thank you very, very much for being with us, sir. The markets are keenly awaiting your commentary and some of the clarifications that we'd like from you on the GST. Congratulations, on getting some kind of a consensus, the laws being passed by Parliament. I will first perhaps begin with the question of readiness. And everybody keeps talking about the July 1st date, or should it be September 1st and all of that. What is the level of readiness on the part of the government, the infrastructure, the kind of education of awareness, and the part of readiness on Indian industry?
Well, as far as the readiness comprises of three things when we talk about readiness on the part of the government. The first is the law and the rules. And as we had promised to all the businesses, we said that at least 3 months before the rollout, we will give you complete clarity on the laws and the rules. So the laws are now very, very clear. They've been passed by the Lok Sabha. Everybody has them with them. The rules, 5 rules we had already notified. 4 more rules would be coming in public domain on 1st of April, as soon as the council approves it on 31st of March. So now that part is over. The second part is the IT infrastructure. Now that part also we are completely on track. I've been monitoring the progress of IT infrastructure. Even the migration of VAT and service tax and excise dealers in terms of registering with GST portal, about 60% of the dealers have already registered.
Okay.
So that migration process is also well on track. The third aspect of readiness is the reach out to the industry. Now that's a very big challenging area for us. And unless we have massive campaigns all over the country explaining people, explaining the traders how to go about GST business now. So that's something which we will have to do in the next 3 months. We have a game plan for it. We have got a strategy for it. We have got people working on it. And we do hope that we will be able to cope up with it.
The reason why I asked that question, sir, is because a lot of people in Indian industry, at least, and tax experts have voiced that concern that maybe July 1 is too close for comfort. Maybe September 1 is a more ideal deadline. It will give Indian industry more time to adapt. Is that a logical argument that cuts ice with you?
Probably people have not taken the government too seriously, because we had been telling right from beginning that we are very serious about it. We would like everything to happen on time. And they have been caught unaware, actually, it appears to me, If they had taken the government seriously, they would have started preparing for it right from August last year. But anyway, I think 3 months is good enough, and I'm sure the businesses should be ready for it now. Now they should cope up with this.
Will you be open to a September 1 rollout?
Well, it depends what is the decision that the GST Council will take about it. And closer to the rollout date, if at all it appears to the council that it's going to be very challenging because the businesses are not ready, then that's a call that GST Council will have to take.
You've spent considerable amount of time with the GST Council in the last 12 meetings. There's going to be another 13th meeting which will perhaps decide on some very crucial issues there. But between now and the rollout date, let's presume it's the 1st of July and let's be hopeful it is. Looks very possible it's going to be the September 1st. What are the priorities of the council going to be? Rate fitment is going to be a challenging area because people believe 4 slabs, can all commodities fit into that?
Well, yes, rate fixation is an exercise, but it's not such a big exercise. We have already announced what will be the formula for fitment. It will be mechanical exercise in most cases. Whatever is your present incidence of VAT plus excise or VAT plus service tax, that will be the tax rate, and closer to that whatever slab you are fitting into. There might be only a few items where there could be some discussion, because those items, even if they are attracting a higher rate of duty now, the council may like it to be in a lower slab, some of those items.
So you're essentially saying that the idea is to fit commodities in rates where they perhaps presently exist, somewhere in that vicinity. But the tax structure does throw up a lot of several goods that don't fit into those slabs. What will the philosophy of fitment be for
so
those?
that is where the discretion of the council will lie, The council will have to take a call on it. And before the council decides it, a group of officers will work on it. They will give all the pros and cons of taking a particular decision to the council. And after that, the council will decide.
I want to ask you a specific question on services, which will now have to be either in the 12 or the 18% category. The finance minister has said that it's a mathematical exercise, but if you actually look at the numbers, due to the fear of the revenue loss, will we see services move really to the 18% bracket? Is that perhaps the only choice and option, pragmatically speaking?
Well, as far as the majority of the services are concerned, yes, they will have to move to 18%. But that doesn't mean that all services will fit into 18%. There would be some exceptions in respect of those services where at present also we are giving some kind of an abatement and for good reasons, because they are not able to claim input tax credit for petrol, for example, in case of transport sector.
That's right.
So those kind of abatements will have to be accounted for, and those services will have to be put in a lower slab.
I'll come to lower slabs in just a bit, sir, because a number of peculiarities exist in the tax structure of certain items, say BDs for one, say sugary drinks, the junk food category. Internationally, the experience has been very different, but there are of course very powerful lobbies at work here in India to bring them to some kind of a level playing tax field. What is the government's view on this at this stage?
So what you are talking about, that all kind of a unhealthy product should be in the same tax bracket. Well, ideally, it's right to do so, because whether it's BD or cigarette, everything causes harm. But sometimes, in the larger interest of the country, we also take a different decision. For example, at present, the rate of taxation on BD is much lower compared to cigarettes. Now, the council will decide about it. This is going to be one of the contentious issues.
So a lot of people are very worried whether Pepsi and Coke and drinks like that or sugary drinks should be in the demerit category. I know hectic lobbying has happened. What's your personal opinion on this?
No, I may not have any personal opinion on this. It is for the council to decide. But the broad consensus in the council is that it has to be a aerated sweetened drink, which would be in that category where the cess would be applicable. Aerated as well as sweetened, That
how do you decide on issues, say like coconut oil? It's cooking oil in Kerala, but it's hair oil in Rajasthan. So the usage and the priority then becomes very varied.
Yeah, so those are the issues, couple of issues where yesterday also in the parliament there was somebody raising this issue.
Yes.
Where council will have to take a call on it, after discussion. And so far nothing has been unsurmountable. The council has taken logical decisions after hearing all opinions. And that's the best part of GST Council's process.
We'll perhaps see the GST Council make those tough calls, but I do want to talk to you about exemptions. The exemptions in indirect taxes are of course a huge part of this entire structure. Are you going to use this opportunity to phase those out, or will you perhaps be using something like a sunset clause that you did in direct taxes to phase those out? Because many people believe this is a great opportunity for the government to phase out exemptions and move towards a path of
I understand what you are talking about is the industry exemptions given for industrial promotion.
That's right.
Whether it is given for a backward area or for a particular product in several states. Now, yes, in fact, because GST is a new tax, it is not necessary for any state to grandfather those exemptions. That's what we have told them. But still, if they do wish to grandfather some of those exemptions, they have to do it in form of reimbursement. Certainly the exemptions will not be given, because you can't exempt anybody from taxation, because if you exempt some product or some company, then the chain of input tax credit is affected. So everybody will pay the tax first, and then if the state or the central government wants to reimburse, they can reimburse that portion of the tax for which they have given a promise of exemption.
So there are certain issues that have irked or have caused some concerns in the industry, and I'm just going to voice specific ones like that. The laws as they have been passed do not provide credit facility for telecom tower equipment. Now this is a change in stance from what was originally circulated. What is the position right now on this, and why has that position changed?
Well, at present we do not give that exemption. We do not give input tax credit for telecom towers, and the council, after a lot of discussion, decided to maintain the status quo in that matter. So that is what is the present decision of the council. There was a lot of discussion about it, whether or not to give it.
But what has weighed in the favor of maintaining status quo and not exemptions?
The main reason is that these are not capital equipments within the precincts of a factory. Because we have decided that as a category, any capital goods in the factory premises will be exempted in the first, will be given input tax credit in the first year itself.
Okay.
Unlike what we have in the excise today, the 3 years period for availing of input tax credit from capital goods. But now in the new law, it's going to be beneficial for everybody, because all the capital goods will be given the benefit of input tax credit in first year.
Let me just move to the registration process right now. I think the one criticism that's coming, and if I may, or the concern if I may, is that service providers will have to get registered in various geographies, and that will perhaps mean about 2,000 annual returns. On hindsight, do you believe that you could have implemented a centralized registration instead of state-wise or union territory-wise? It just kind of it goes against the thesis of ease of doing business.
Well, ideally, any GST should be administered only by one authority, either the state government or the central government. There is no country in the world in which the administration of GST is done by two authorities. So we have a particular challenge in India. How to cope up with this challenge is an issue.
It's a very unique GST.
It's a very unique GST. If the states are willing to trust Government of India for collection of taxes, then we would have only one authority. But that is not the case. And because the states themselves want to administer the tax, they also want to know how much of services has been given in their state by all the people who are operating on all India basis. And that is why all the officers also at the state level, they were not in agreement with the idea of centralized registration. The very fundamental principle of IGST, that there would be accounting for services given in every state. Any services which are given from one state to another, there will be IGST on that. So those principles will be compromised if we go in for a centralized registration. So all the officers, the state level commissioners of commercial tax, they were not in favor of single registration.
But will you admit it makes life difficult for service providers?
Not so much. What we have done is that the valuation rules for intra-company supplies have been very liberalized now. In fact, people don't have them with them, but they will be coming in public domain on 1st of April. So we want to leave it for the companies to decide whatever valuation figures they want to put, and then we won't challenge it, So those intra-company supplies where the valuation was a big challenge, that has been taken care of. And otherwise also, wherever place of supply rules are very, very clear, there is no problem. Because we have given elaborate place of supply rules as far as services are also concerned. So if the companies and the banks and the insurance companies, if they follow the place of supply rules, it's very clear where is the incidence of tax going to fall. And so they may not have much of an hassle. And all that, what they are talking about, has not to be done manually by anybody. It is all computer ERP system, which has to be designed for that. ERP will take care of how the taxation will be divided.
And perhaps being digital will solve some of those issues.
Absolutely.
Sir, I mean, it's a point of bother for a lot of people out there that there are certain commodities that are obviously outside the GST net. For instance, petroleum or alcohol. How are you going to compute them for tax credit? Is that going to be challenging?
Well, the main problem that they will face, little bit of problem is that those people who are making these products, petroleum products, crude, diesel, etc., so the refineries, they will have some kind of taxation which is paid on the inputs which are used in making of these commodities. And those taxes will stick, they will be stranded. They won't be able to get input tax credit for these taxes because their final product, the diesel and the petrol and the ATF, they are in exemption. So they are not in exemption, but the GST is not leviable on them. So that's why they won't be able to take the input tax credit on that. Now this percentage, as we are counting, is about 1 to 1.5%, as the industry has represented. That percentage is not big, 1 to 1.5%. We'll see how to take care of this. One method could be that their present incidence of VAT plus excise duty on those products could be reduced to that extent, by state and the center.
And is this going to be a decision on the fly, or will this decision be taken?
No, this will be in the GST Council only, in case if that is a big problem. But I think 1.5% tax increase probably they can absorb for domestic purpose. As far as export of this product is concerned, we are going to refund them. It is going to be zero rated. So any export of petroleum, these 5 products, if they have paid any input tax credit, I think
That
it's
will be
going to be zero rated.
I do want to talk about the one of the key changes in the laws that was passed yesterday is that the taxpayers will now be assigned to or will be seeing a new assessing officer that they report to. How are you going to take care of how the division will be? Will you be retaining the larger taxpayers with the center, the smaller ones with the state officials? How will that division really work?
We have already decided that basis of division. We have said ki any dealers, all those dealers who are below 1.5, there will be 90-10 division between state and center. And above 1.5 crore, it will be divided equally. Having done so, now the question is that the exercise will be like this. At the state level, the central government commissioner and the state government commissioner, they will sit together.
Okay.
They will have a complete list of their below 1.5 and above 1.5 category people. Now, they can do some kind of a randomization. They can do stratified sampling also, stratified randomization, in which, say, for example, urban rural can be separated and more portion of below 1.5 can be given to central government in urban area, because central government's offices are located in urban areas more than in rural area.
Right.
So they can decide whatever way they want to do, but the ultimate number should match 90-10 and 50-50.
The interstate movement of goods and services is another area that the council will work upon and is an area of challenge. Do you intend to start eliminating border posts and tax checks? Because the whole idea of GST is one country, one tax, seamless movement, and which is why many people believe that will you be making a beginning on this?
Yes, surely. As far as GST is concerned, there would be no need for any state to have any border checkposts at the state border. There will be no need. But the businesses are saying that, okay, out of 5 to 10 checkposts which are there at the state border, you are removing only 1. What about the remaining 9? Or what about the remaining 8? So the GST Council is also working on this agenda. GST Council has set up a task force of officers of other departments also, road transport, Home Ministry, Environment, and state level officers also, to work out and come back to GST Council as to what can we do to minimize the checkposts at the state border with the use of technology.
The other point of contention when it began really was dispute resolution. You've tried to minimize the fault lines there, but what happens? I mean, who is going to resolve dispute resolution? And one of the obvious questions that one would like to know is, if there are two sparring states, what happens in between? Who assesses it?
Well, that's why the dispute resolution mechanism which is provided for in the law, there is going to be a tribunal, there is going to be a tribunal. The tribunal will have state benches and the national bench. So if there are disputes of say place of supply rules between the two states, then it will only go to the national tribunal.
Okay.
So that is one way. Secondly, also, if there is an IGST adjudication to be done, in which place of supply dispute is involved, then the central government authority will only adjudicate. It will not go to the state government authority. Okay. Suppose there is a dispute of whether the place of supply falls in Orissa or West Bengal, then both the officers are interested party. So the council has already decided that in such cases, the central government officer will adjudicate at the first level, and at the second level, it will not go to the state level bench, it will go to the national bench.
Okay. Why do we need a separate body on anti-profiteering? That's the clause that you've put in. There is also a CCI in provision. Is there going to be duplicacy of intent and action?
Yesterday, Finance Minister in the Parliament had clarified this point. That normally where there is cartelization, etc., the role of Competition Commission comes. But here, in the anti-profiteering clause, what we have done is, we have told the people that, you will pass down, if there is any benefit of taxation given, you will not pocket it by way of a extra profit in your pocket. You should ideally pass it down to the consumer. And in order to keep a check on this, we may give the work to an existing authority, and we can choose even Competition Commission if we want to do it, or we can sort of set up a new authority also if the GST Council so decides. But this is only going to be a temporary phase. Anti-profiteering measures may not be required because the competition will take care and lot of public awareness will take care. Major work that government has to do is to tell the people that now in so and so product the rate is so, but there will be input tax credit available. So don't think that the rate of tax has been increased.
So you were saying that it may well be the CCI, it could be a body outside of the CCI, but it may be a temporary provision that's
It will be a temporary provision because after 1 year competition itself will take care. Only when there is a sudden jump of tax rates, either it goes up or goes down. Now that is where we have to take care.
And those will perhaps be early hiccups to begin with. Yesterday, sir, in the parliamentary debate, it came up time and again. I think the finance minister made a point in his closing speech as well. The inclusion of real estate. There is a lot of clamor out there that why should real estate transactions not be a part of the GST? Is there any thinking within the government, early thinking within the council to make it a part, or petroleum for that matter at a later stage?
Yes, both these products were discussed and as far as petroleum is concerned, the states are not willing to sort of bring it into the GST in the first year itself. Because it is some kind of a risk insurance for them, because at least 30% of the tax income of state comes from alcohol and petroleum products.
That's right, yes, yes.
And other stamp duty, etc. Now, this is some kind of an insurance for them, So that 30% income they don't want to sacrifice at the moment. Suppose if there is a good buoyancy in the GST after 2-3 years, then maybe they would be more willing to come forward and include it in the GST kitty. Once they see the buoyancy.
Maybe not right away. But do you have any rough timelines that you are working with?
We have decided that every year we'll review it. After we see the result of the revenue that we get in GST, every year we'll review it and see whether we can do that.
Two quick last questions, and one of them of course has to do with compensation. You have committed yourself to 5 years of full compensation. In hindsight, and given the buoyancy that one is estimated to arrive at this, perhaps it's a little too ambitious. Do you believe in hindsight the central government has put its own fiscal position under pressure to commit this?
Not really, because if you've seen the genius mechanism that we have set up for compensation, the compensation is not going to come from government's kitty.
It will come from the cesses.
It will come from the commodity basket itself. And the council will have to decide what commodities to put cess on, whether to expand the basket, whether to increase the rate of the cess in order to cope up with the requirement of compensation fund. So it's not the government. The government is not going to give it out of the general kitty.
So it's not going to be affecting the government's fiscal position at all?
Not at all. That is why we have created this mechanism. It is independent. And the states are also very comfortable because they don't have to depend on the budget to be passed. This is all going into public account straight away. And they can be given. So it
comes from a cess kitty and is going to be
going
used
to public
right
account,
here.
Independent account.
The one issue that has caused some amount of discomfort across stakeholders of GST, sir, I'm going to close this interview with this, is that the penal provisions around the GST are A little vague and B a little draconian because there is immediate arrest on non-payments. What are you going to say to assuage frayed nerves?
Well, it's not at all draconian. You tell me there are only 3 circumstances in which the arrest provision applies. One, if you are moving goods in which tax evasion is more than 2 crore, so much of quantity of goods without carrying a proper invoice, that is one. Or if you are issuing an invoice in which more than 2 crore of tax evasion is concerned and you are not actually transferring the good, you are only creating an invoice for the purpose of taking input tax credit. That is the second circumstances. The third circumstance is ki in case if you collect money from the taxpayers and you keep it with you, don't deposit in the government in time, then, and that also quantum should be more than 2 crore. The tax evasion has to be of more than 2 crore, not the value of commodities seized.
Right.
But the total quantum of tax evasion has to be more than 2 crore. Is that draconian? If somebody is trying to run a racket in which he does mass scale tax evasion of more than 2 crore, he should be behind the bar only. And there also, from 2 crore to 5 crore, up to 5 crore, the arrest can be made, but it is bailable. Immediate bail has to be given by the person who arrests him. So if he gives a bail, immediately he will not be taken to custody at all. And more than 5 crore only, it is non-bailable. Non-bailable in the sense that bail will not be given by the arresting officer, but he has to be produced before a magistrate within 24 hours, and magistrate can bail him.
So while most people will hail the fact that moving to a GST will ease business, will bring in greater transparency, will increase India's tax buoyancy and the tax base, given the recent incidents that have happened in terms of data breach, how concerned is the government about the security breach of the GST network itself?
We are taking foolproof measures to ensure that our IT systems are fully protected. IT audit, security audit will be done regularly, and those agencies which are in charge of the country's IT security systems, they are also having a look at our systems, and unless they certify, we won't go ahead. So they are also going to be in charge of that. So it is a foolproof, fully secured system of IT that we will be implementing.
On that note, sir, thank you very much for speaking to us. Pleasure.
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.